It certainly seems to have crawled itself back above the psychologically important 1200 level and looks to be consolidating there at the moment, much like the dollar index is consolidating at its recent highs. And the relationship between gold and the dollar index of late has been very tight. And I think that short-term direction in the gold market will likely come from any fresh direction in the dollar. A little bit further out, 2, 3, 4 weeks, possibly a few months out, you're going to run into the seasonal buying period for gold, the Festival of Lights in India, the wedding season in India. These will add the usual support to the market. But thereafter, as we move right at the end of the year and into the beginning of next year, I think the macro situation comes back and the negative framework for gold resumes with the rising dollar and so on.
And the Indian matriarch is a force to be reckoned with, isn't she? My mother-in-law is one of them. They're very price sensitive, the Asian buyers. But is it going to be enough to revive the market?
No, I don't think so. But I think that people will be reluctant to sell gold potentially in the midst of that period. It tends to add a stabilizing force. Physical buying this year has been weak. It's been weak in China. And especially when you compare what's going on in China to what we saw last year, all of the year-on-year comparisons naturally are stacking up very negatively compared to what we saw last year.
I've been hearing that 1,180 is a key support level for gold. If it's violated, then we could even see a run towards 1,050, possibly even 1,000.
We could, yes. Interestingly, there's a lot of options in the market below 1,200 in terms of put options. Huge open interest, much like Brent. And what happens is, as the market does start to move down towards these levels and test these levels, people that are short these options are then forced to hedge their positions, and they typically sell futures against these positions, which increases the volatility, increases the slipperiness, as it were, as prices then move down. So you could get a sharp flick down, absolutely. It will probably be met with some physical buying, but it's unlike. I mean, historically, physical buying has never catalyzed a sustained uptrend in the price of gold of any meaningful degree at all. Gold is much more than that. It requires, the sentiment component, many other things to be in alignment for it to have any traction.
Oil's an interesting one because our survey for the quarter has found that the jury is fairly evenly split down the middle. Yes, the bearish bias is very strong. You can see this from what prices are doing today. But if we have a harsh Northern Hemisphere winter, if Putin waves the threat of supply cuts to Europe, if there is an OPEC cut as well, geopolitics get worse, is it possible we could see a slow grind higher towards $100 a barrel Brent?
I think so. I think the weakness of late has been possibly a little bit overdone. It's been met, in addition with the bearish supply and demand dynamics in the market. There's been a lot of technical selling. There's been this option hedging that's pushed prices very, very quickly and swiftly lower. So as we move out of the seasonally weak period, the refinery slowdown period, towards at least one of the product demand periods towards the end of the year, you could see prices grind up slowly.